Okay, Matt the Mortgage Guy here. Just a quick video to talk about the power of a low interest rate, the magic of math, how it relates to mortgage. So, in order to save time, I wrote a bunch of numbers up here. 360K loan amount. Just wanted to compare and just mess around with the amortization schedules at a 4.25% interest rate and a 2.99% interest rate. Now, everybody's different, their goals are different, but what I try to look at is not only what your monthly payment's gonna be, but over time, how you're gonna pay things off faster at a lower interest rate, how much total interest you're gonna save. Now, here's one of the things that I try to be super honest and straightforward with people about. Comparing the total amount of interest you pay on the life of the loan, current versus new, is really a silly calculation because 99% of folks aren't staying in the loan for 30 years. So if we look at the first 5 years, the first 10 years, when you either sell, refinance, move to a different house, whatever the case may be, it's just a better thing to analyze than, hey, over 30 years, you're gonna save 90,000 interest. Well, 99% of the time, you're not gonna be in it for 30 years. So it's a silly thing to look at. It creates a really big number, so wow, but it's not that useful in my humble opinion. So you look at this payment, this is principal and interest at 4.25%, $1,771 versus $1,517 at the 2.999. Now it's $154 less per month, which is great, but to some people, it's like, that doesn't really excite them. And when we're talking about refinance, everyone's needs are different. $154 a month might not really, hey, I don't want to incur $3,500 in costs or whatever the cost of the refinance are going to be to save $150 a month. It's just, I don't know. For a lot of people, it just doesn't get them excited. So what some people do is, oh my gosh, total interest. Look at this. You're going to pay $278,000 in your current loan. You're only going to pay $186 in this new loan. That is, what is that? $92,000 over the life of the loan. Like I said, life of the loan, not a really good thing to look at. You're not staying in this loan for the life of the loan, more times than not. A cool little calculation I included here was if you took this 2.99% interest rate and said, hey, I'm gonna pay the same that I was paying at 4.25%, this plus $154 a month, I'm gonna throw it at the principal. A really good idea for folks who don't need to lower their payment, but when they do, they take that savings, they go, you know what? I'm gonna pay it towards principal. And what's gonna happen is then their total interest on this new loan's $157. Now they're like $221,000 ahead, this loan versus that loan. Again, not necessarily gonna be in it that long. So I like to look at it is, people are staying in their homes longer nowadays and in their mortgages longer, probably because rates are lower. But whatever the case, let's look at a 10-year. And let's say, starting at 360, 4.25, what's your balance gonna look like in 10 years? Now, 286 is what it's gonna look like at 4.25, based on just that amortization schedule. You're gonna be $13,000 ahead at the 2.999 because it's paying down faster. It's got a lower interest rate, so more is going towards principal and less towards interest on this loan versus that loan. But here's the cool part. Take that $154 a month, apply it directly to principal every single month. Then at that 10-year mark, you're at 250K. So if you had these loans side by side and you said, well, this isn't our forever home, we're not staying here forever, but we're probably gonna be here for 10 years until the kids get out of high school, and then maybe we'll move to a condo downtown or whatever the case may be. Keep your payment the same. Save $154 a month on interest and throw that $154 at principal. Now you owe $250 after 10 years versus $286. An extra $36,000 in your pocket that's gonna go towards the next home. We're gonna go in, wherever it's gonna be, you're $36,000 ahead. Now that's the type of stuff that I think is a reasonable analysis and something that people should take into consideration when they're thinking, I'm gonna stay in this loan for 10 years, but I don't know, maybe it's not even 154, maybe it's 127 a month, and hey, I don't wanna incur, an appraisal's not needed, you told me that, and fees are relatively low, but still $3,100 between the title company and the lender. I don't know if that pencils. If that $3,100 today got you $36,000 in your pocket when you sold, it's probably a worthwhile endeavor. So any questions at all regarding mortgage in general? If you want me to geek out on numbers, trust me, I'm waiting for your call to do that. So give me a holler. Talk to you soon.